The name Authentic Brands may not ring a bell, but I'm willing to bet that you're familiar with some of its subsidiaries. Barney's New York, Forever 21, Lucky Brand, Nine West. Yep, those are all owned by Authentic Brands, and it's about to go public. Hi, I'm Shannon Terrell, senior writer for Finder.com's investing channel, and today we're going to get into Authentic Brands IPO, the pros, the cons, the financials, plus how to actually purchase the stock once it goes live. Let's get into it. Okay, before we get into the juicy stuff, let's take a quick look at what we actually know about this IPO. Authentic Brands publicly filed its S-1 form with the Securities and Exchange Commission on July 6, 2021. It plans to go public on the New York Stock Exchange under the ticker symbol AUTH, and the deal is being underwritten by JP Morgan and Goldman Sachs, among others. Bloomberg believes that Authentic could be worth nearly $10 billion, and that it could raise as much as $100 million through its IPO. And as far as tangible details are concerned, that's about all we know. The stock's price and launch date have yet to be announced. But hey, if this IPO has piqued your interest, just head on over to our Authentic Brands IPO page on Finder.com. We're updating the page regularly in the lead up to the stock's launch, and as soon as more information is released, you'll find it there. The link is in the description box below. Okay, this part is always fun. Let's talk about why this IPO is grabbing headlines. I touched on a few of the companies that Authentic Brands manages, but let's circle back because this company's portfolio is pretty dang impressive. Authentic owns the license to more than 30 brands, but this company's reach goes far beyond the retail sector. Authentic Brands also earns revenue as a licensee of intellectual property from Marilyn Monroe, Muhammad Ali, and Elvis Presley. It also owns Sports Illustrated. Multinational investment manager BlackRock invested $875 million in Authentic Brands back in 2019. And based on Authentic's performance throughout the pandemic, it would seem that BlackRock's investment has paid off. And that's really at the heart of what makes Authentic Brands IPO so interesting. A retail-oriented company going public at a time when it seems like everyone is switching to e-commerce seems odd. Some might even call it risky. But Authentic has proven its ability to navigate the shifting framework of the pandemic and turn a profit. For evidence, look no further than its balance sheet. Okay, on to the good stuff. How is Authentic Brands performing financially? Well, for 2019, it reported a net revenue of $480 million, with a net income of $96 million. In 2020, its net revenue rose to $488 million, and net income exponentially grew to $225 million. And if you're wondering how the company's performing in 2021, for the 3 months ended March 31st, 2021, it reported a net revenue of $160 million, with a net income of $294 million. You heard that right. Authentic Brands earned more net income in the first 3 months of 2021 than it did in all of 2020. And here's the bottom line. Authentic Brands is profitable. It's been profitable for years, and it's actively increasing its revenue and net income. For a company that specialized in what was largely a brick and mortar industry prior to the pandemic, I'm impressed. This company is clearly doing something right. We literally just talked about this, so I'm not going to go into too much detail here, but Authentic Brands is profitable. It put in a strong performance over the past few years, and that's a promising indicator for interested investors. Plus, investing in Authentic Brands means you're buying into a little slice of ownership in all of the companies nestled under Authentic's wing: Aeropostale, Airwalk, Brooks Brothers, Spider, the list goes on. And the fact that Authentic owns the licensing to Marilyn Monroe, Muhammad Ali, and Elvis Presley, who doesn't want to back the king of rock and roll? Now, for the risks that pertain to this listing, we need to take a step back and look at the entire sector. The shift that you may have noticed over the past year or so to online shopping wasn't just your imagination. It also doesn't appear to be temporary. In June 2020, global retail e-commerce traffic broke records when over 22 billion monthly visits were recorded, according to Statista. And as internet access increases around the world, the number of digital buyers only continues to rise. Statista states that there were 1.66 billion global buyers in 2016. In 2021, that figure is expected to hit 2.14 billion. The way we purchase services and goods is changing, and companies that are rooted in brick-and-mortar retail, like Authentic Brands, will need to be flexible and adaptive to accommodate. To invest in Authentic Brands, you'll need a brokerage account. If you've already got one, great. If not, you can explore your platform options by features, fees, and more on finder.com to narrow down your options. Once Authentic Brands stock goes live, it will be available for purchase on the New York Stock Exchange. Log into your brokerage account and look for the company by name or by ticker symbol. AUTH. You can set up a limit order to purchase shares at a predetermined price of your choosing, or you can wait for the stock to go live and buy the shares at the going market rate. And there you go. A look at Authentic Brands' upcoming IPO and financial performance to date. Before you add this stock to your watch list, conduct some research to vet the company and ensure that it's the right fit for your portfolio. And be sure to check back to our Authentic Brands IPO page for the latest info on its public debut. If you like this video, hit the subscribe button to be the first to know when new Finder videos drop. Thanks for watching.